This is a look at the S&P 500. Well, this is classic. What I told my members last week is that it was pretty likely in a special report, because I didn't do MarketWeek last week, that it was pretty likely that this low was going to come early. You can see this was 20 days, 20 days, 20 days. That's this low, that's this low, that's this low. All of those 20 days. And then this, because of the super depressed and really oversold condition, we were suspicious it would be early. That was only a 16-day cycle, so there may be a little shift in here. And we thought that the rally would get you up to these areas here, 25.5 to about 26.70. Well, look where we got, right there, and then we had this gap downside today. This still looks like it's going to chop around a lot in here before it turns down and then maybe tries to bounce again. This is all relative to the sum of the evidence telling us that we're probably in an upward correction going right now that could last quite a number of weeks. Continue to chop around in here. We're going to look at the support zone as the downside minor support that is going to create a range. The range being this area around 2660. This right over here is 2472, and this is 2360. So 2360, 2660, chopping back and forth, moving sideways, implied volatility likely falling off in here and continuing to fall off. We had it up in huge numbers, and maybe it's going to fall even into the 40s in this area over here. But then at some point out over here after this rally, we think that come May, June, July, the next collapse is going to be out there. So this is a period in here where we see the sum of the evidence as range bound. As things got too cheap and then things look like they're the place to sell it, and you keep bouncing around in here. We're going to call a 300-point range in the S&P 500 for quite a number of weeks, 2360, 2660. That might help you, those of you that like to use strangles in there. And momentum, you can see, is still down. There's been a sell pending in here now for a few days on the projection oscillator. So there's a strengthening that's occurring in here. We'll probably see some dip for further down in here. And then if we continue to be able to hold in this range and keep getting down into these into the lower level here, you'll probably keep getting pops into the top of the range. So outside of any disastrous news that comes out right now, we're going to look at that range and here this very wide chop. We think this area up here, for those of you that did not sell or when the market was at 33.90 up 3 up over here, or when this turned negative and got to the sell zone, this was all the warnings right in here. If you didn't sell, change your allocations at that point. This is the area to be doing that. That's my very educated opinion after 45 years of doing this. I traded, I think it's 10 bull markets and 10 bear markets right now, starting back on the floor in 1974, traded that 1974 bear market, traded all of the crashes all the way up through now, and I'm telling you that my very informed and experience and the technical analysis that we have in here now says this is the time to look to take care of yourself financially as well as physically. This area right over here is a problem for the market, and if your portfolios have problems, well, this is what I'm telling you is the highest probability. Top of this area right over here, 2780 approximately. I think it would be an extremely rare condition that could get it up there. 2760 right over here is really the peak that I'm looking for, and it probably tries to get up there a number of times and trades in this zone.